Look how wild that all looks. Let's zoom in. Well, that's zooming in. That was yesterday. Here's pre-market all the way up today. We closed up about 1/3% all across the board. Again, transports led the way. We've talked about that. And here's even your headline from CNBC. Stocks rise as U.S.-China trade talks restart. S&P heads for best first quarter since 1998. Kind of hard to believe. You know, you guys have seen the markets. You can't ignore what it's done since January. The curve is inverting. Today, yields went down on the short term and the long term, but there was some pressure on the midterm ones that kind of came up and eased it, but the 10-year still closed. That's the one, 2.388. Around the same price it opened or got officially closed at yesterday. So today was an issue of rates and all that stuff. I want to talk about why the market went up, but there's really a big name of the game here. And I thought you guys missed me. That's why I'm on the camera. So hello, make sure you guys drop a thumbs up on the video if you like this content, you want to see these market updates so you don't miss any of the other channels, and to show support because you love us and the cult. Shout out the cult, shout out the chat. Everybody be on the stream. We're live Monday through Friday, 30 minutes before open. So we're going to talk about this, and we have the nightly watch list. So it's in the comment section, description. I better see you guys there, and subscribe if you're new. But I want to talk about what I've said before, and I said this a few weeks ago, and you guys saw how crazy the market was right after. Digestion. The market is preparing for some very, very big things right now. And what makes me say that is the moves we're seeing now today. Rates went up again, or rates went down again, which should have added more pressure. And again, we're seeing the market be a little stronger. It is learning, you know, that's where you guys, when we put up divergences, and I've showed the divergence between the bonds and the S&P, they look clear, but it's usually in retrospect. So what I'm saying is you're watching it day to day as the market is adjusting to rates. And like I said in the video last night, you guys should check that out on the yield curve. The market in the bond markets, even the stock markets, it overreacts and it underreacts. So that's what's going on. But I want to talk about what's getting digested in relation to what happened here. So before I do that, I'm going to talk about kind of some of the main things that happened and what we're looking at. Here's TLT, and this is that inverse of the rates. So if rates are going down, TLT is going up, and it gapped up a little bit. It held up, and sometimes it looked bad. And I said, watch out for that. I'm going to talk about it on the watch list, but watching how if the market goes up the same time TLT does, so there's the market there, there's TLT, it could give you a nice thing to, you know, pay attention to of when that divergence hits, but the timing, and that's where I'm saying digestion is so important. There's that. An hour before close, Boeing got news of a lawsuit that the first case was filed in Illinois court, a federal court against, you know, it was one of the victims' families, I believe, related to the 737 MAX 8 crash. However, the stock didn't move, and that was very, very weird. Shout out to chat for bringing that news up, but again, the news circulated and nothing really happened. So that's going to be something to watch. You know, we could talk about it. We did talk about it on streams. You know, at the end of the day, the lawsuit may not have that big of effect, even if they settle $200-300 million. That's what somebody said. Like, how big is that going to be? But I said in my other video, the issue is both the punitive damages and the fact it was filed by somebody who's not an American citizen, or it's not in U.S., essentially, because Boeing is indemnified against pretty much a lot of U.S. lawsuits, even by the government, because of the nature of their business. So a foreign person or a foreign entity suing them, it's a little bit more risky, but we're going to see how it plays out. And lastly, and again, there wasn't too many individual pieces of news. I'm going to talk about it on the watch list. There was like Lululemon, which helped bring the market up. FedEx and transports, they rocked and they kept everything up. But here we have Facebook. Trump sued them, or the DOJ, there's a mix, but they got a suit for discrimination. They went straight up. And again, this has been the story with Facebook. They've had so many different pieces of news day after day, and we've seen how they've actually responded quite positively. So watching that is going to be interesting, seeing how it plays on the market. Even Apple too. Apple showed some weakness, but that was pretty much it. There wasn't anything else crazy beyond that. But now this is going back to what does the market need to digest. One, it's going to be rates. It's going to be how TLT functions, but I talked about this before. I want to talk about it again. It's not going to be the yield curve. I'm truly, and you guys know, I don't really make too crazy of predictions here and there, but I will say, I said this a few weeks ago. I think it's coming back now. We're getting more data, but Brexit's going to have a big hit. I think, you know, oh wow, Wells Fargo CEO Tim Sloan retired. So that just came out actually right now. Let's check this stock, see what happens. Oh, they like it. The CEO retired. So that's going to, and now good. This is just happening right now as I'm making this video. Here's the key to this. If the market, it likes it, or Wells Fargo likes the fact that the CEO is resigning, and that could have implications based on the court cases and what other stuff they've been dealing with. But this is going to ease up some of the pressures on financials. So if they're shooting up like this and they're rocketing, that could take a lot of pressure. So that could help the market stay up tomorrow. But what I'm saying is, because again, even in this market, you guys see how the last few days have played out. This isn't about, if you're trying to predict something, you're going to get screwed. Even if you're trying to play the options at least. But even in general, the market has barely moved. It's staying at the same place. How do what is going on? And there's so much happening, but people are confused. It's not being reflected because I think it's big food that's came in. There's a lot of stuff that needs to be digested, and we're waiting till it gets to the end before the market reacts. So, and the biggest thing I think happening right now, it's the bond yields won, but now what's affecting them? Because today, this was part of it. I'm going to show you guys the currencies here. Here's the global currencies. As you see, negative 1%, that is the pound. That's down 1%. You go through and this is why, some people ask, why do I make big deals of currencies? These are currencies, think about it. This is people's exchange rate, their livelihood, their loans, all their money. Currencies are not supposed to change a lot. Now, again, look at Brazil's down 2%, which is a lot. But the other big one is the dollar. You see it's up 0.75%, and then the pound is down 1%. This is important, again, because if global currencies fluctuate a lot, you guys, people aren't going to purchase stuff. Investment ceases. That hurts the economics if people's value of currency is changing drastically month to month. So any 1% move is huge. So Brazil's move is one. I brought up Turkey the other day, and even on the watch list, that's something to take a note for. But here now, the pound dropped, and it shot the dollar up. And that's interesting to note how it's affecting China currency. And again, we have trade talks tonight, and we're going to see how that plays. But the market has to digest, one, a low rate environment, how it's going to react to the rates dropping and the yield curve inverting. But now Brexit. I think Brexit is no joke. It's literally every single day we're getting more data. The pound plummeted today. That's a sign. And coming into Brexit, you guys don't need to know what politics is happening in politics. Where is it? Oh, the German bond. There's a 10-year I brought up, but the German bond went negative again. And as you see, that's when we brought it up the other day. No, it closed here at 0.10 a few days ago. So you're seeing it's been drastically dropping. And that is big. Again, bonds are big investors, banks, people looking for safety and people worried. So with the yields going down, people are rushing into it. So watching the pound drop and watching the bond continue this yield decline into negative rates, like I said, you bring up the German bond. Last time you saw us actually dip heavy into, oh, come on, I got to refresh this. Last time we dipped heavy into the negatives on the German bonds, the last time was literally right here. Take a look. There it is. And that's Brexit. That's the last time. It was right before Brexit and then as Brexit happened. So we're seeing the same pattern happen, but we haven't had the news hit. The market doesn't know what's going on. So it's preparation. And I think that Brexit's not going good. The market has to digest that, and it has to affect, again, because if the pound starts moving, it moves the dollar. It's going to affect the Japanese yen, the Chinese currency related to the trade talks. And again, we have those tonight. And then it leads this whole cycle of what's going to happen. So putting that all into perspective, that affected the market today. That's something I would watch out for, but this is now what needs to digest. It has to, people digesting everything from Brexit, the foreign stuff, the China trade, what the yield curve means right now, and then the further economic data. We also had today pending home sales, which the market really didn't care about. They were slightly down, which wasn't too big of a surprise. However, they were down 4.5% year over year. So I'm going to make a real estate update so you guys could get, up to speed with that. And then the GDP, it was a barely, they revised it barely down. And like I said, unless it surprises, there was no surprises up or down. But again, this is part of the digestion, whereas the markets need to start digesting this. They need to start digesting what the Fed is expecting to do, how it's going to price in the bonds. And then really, what type of market we could see with the rates dropping and the yield curve inverting. The market's going to find its own equilibrium. So it's that. But honestly, I think the market is preparing for more Brexit issues. What's happening there? I think we swept that under the rug after what happened 2 weeks ago. But I even talked about it 2 weeks ago. And now we're seeing it come into place. Now it's not we're not speculating, because once that pound drops below 130, goes down to 126 or something, or 128, that's the next big key to watch out for. But the bonds, and the fact the bond market is moving how it is, that's something you can't ignore, and it's doing that for a specific reason. So pay attention to that. So that's pretty much it, you guys. I'm going to leave it there. Like the video, subscribe if you're new, and come to the live stream 30 minutes before open, youtube.com/the stock market. It's there. Let's go. Shout out to chat. I love y'all. Peace.